Anakin traders, we're back. Today is January 5th. Taking a look at the market, it's much more negative today from yesterday, and we have not entered a trade yet, but I did want to talk about why. So currently what I have on the screen is the current options for trading that I took a look at a few minutes ago. So we've got a call position that we could take at about 38.40 and a put position we could take about 37.60. Each one is about 40 points away from the market. And what I'm waiting for in the market is a higher high, which I should have did the other day. So I don't want to make that mistake again and have the market just continue to drift down. Right now we've got a series of lower highs and basically lower lows right here. So here's a low, and even inside of this little swing area, we've got lower lows. So I really want to see this particular area hold and we get a higher high, at least above this particular high right here, which is 38.16, which it might do in the next minute or so, or it may not. But I'd really like to see a high above this one. This seems well established to me. So I'd like to see a high here, or I'll even take a higher low. So if we don't breach this high, I'll take a higher low, seeing that this particular line holds. So that's what I'm waiting for. And what I'll probably do at that point is take a put position because the VIX is higher. So we're getting, we'll probably be able to get further away from the market's established range on a put than a call, because a call is going to put us very close to the open. And we're not going to get any kind of protection from the standpoint of an area of resistance. Excuse me. It's early. Well, it's not early, but I woke up late, so that's where we're at right now. I'm just kind of waiting on that to play itself out. If not, then that means the market's going to keep drifting down. And at some point, if it keeps drifting down, especially if it breaches this area of support, we're probably going to get a punch down. And that's the last thing that I want when we're trading a little bit closer to the market. So I'm going to be patient and I'm going to wait to see if we get some higher highs here or higher lows. Ooh, excuse me. Damn. I need to get some breakfast, y'all. But that's what I'm waiting on. So just wanted to record that and we'll see what happens. Hopefully we'll make a move before 12:30 or something like that, so I can get this out of the way. But it may be a thing where I don't trade today, or I decide to take a late call spread or something like that. But right now, the market is showing me that it wants to keep drifting lower and it wants to test this area of support. So I'm going to let it do that and get out of its way. So we'll check back in. All right, we're back. It's 1:58, almost 2 o'clock, and I think I'm ready to pull the trigger on this particular trade right here. I might have just missed it trying to record actually, but I wanted to get 10 cents for this 38.60. Let me show you what the market did since. So we're already in here at 37.70 on our put spread. The market did hold on this level right here, and we got a pop up here. I wanted to see if I can catch this area of consolidation on the call, but trying to record and everything like that, so I might have to wait a little bit longer. I do want to discuss why you don't really just want to pull the trigger on iron condors both sides at the same time, and why you leg in. So we could see earlier, if I were to pull the trigger on this iron condor at the same time I pulled the trigger on this put spread, I would have been sitting at 38.45. That was the trade at that particular time. that was available on the call side. Now you can see with this pop up that kind of put us in what I consider the danger zone, or at least the pay attention zone, which is getting within 20 points of your strike. And that's what this did. So we got up to 38.28 and our strike would have been sitting at 38.45. So not exactly 20 points, but close enough where you start to pay attention, you start to sweat a little bit. And I don't want to do that. So by waiting on the market to do what it's going to do, by waiting for some higher highs to come into the market, and to kind of put in this range right here, what we've done is we've extended our potential trade from 38.45 up to 38.65 or something like that. Whatever I said, the trade I was looking at, 38.60, I guess, 38.60. So what we were able to do is get another 15 points of cushion by waiting and legging in, waiting for the market to give us some more space, right? So we bought ourselves an additional 15 points of risk management, essentially, right? So that's why I like legging in, and I don't particularly like to just place blind iron condors. I don't like that at all. So let's see if we can put this trade in. We're at 10 cents. I think I'm gonna just go ahead and pull the trigger on this. I think this will be okay. I've already checked all our stats. Let's just take a quick look over here at our internals. Our internals are kind of mixed in the middle. We don't have that much time left in the day. We've got a pivot point, ahead of us. The market seems to want to play around with this particular pivot point right here. Our stochastics really isn't lining up, but I haven't fixed our stochastics yet to look kind of like how I want it to look yet. But that's okay. If we look at the rest of our internals, our put call ratio is flat. The tick is more on the upside, but not really popping up into the thousands. It's kind of settled. The volume is right kind of in the middle, hasn't really changed all day. And our advanced decline is improving a little bit, but kind of sitting there. And our VIX has fallen, but it looks like it's stabilized, which all bodes well for a call trade. So I think I'm gonna go ahead and drop that in, see if we can get that filled. And for those of you who don't know, this is how much commission you're looking at for one vertical contract, about $2.30, something like that. So we'll pull in a net 772 from this trade. So let's go ahead and pop that in. See if we can, there it is. All right. So I'm okay with that. We got a good bit of cushion. The day, we only got 2 hours left in the day. We got enough cushion, I think, for the end of the day, the last 30-minute volatility spike potential. Yeah, so there's your trade. After market close today, and just wanted to make a quick video wrapping up what our performance was today. You could see we are at 752. We've officially crossed the 50% profit threshold after just 7 trading days, or could be 8 trading days. So I'd say a solid week and a half, 2 weeks of trading, and we're up 50%, which is a little bit ahead of my projected what I want to do with the account and what I want to do with this trading strategy. So pretty good with that. And it's because I've been able to leg into iron condors, which has definitely driven our profit to higher heights than it normally would be, because we're only trying to get about $20 per day, but we've been averaging probably closer to $30 to $40 a day. So at this pace, if things keep going like this, then we should be able to add a contract in mid-January sometime. So that's pretty exciting. But of course, we don't want to get ahead of ourselves. We want to keep being diligent and careful. We can take an L at any time, so we want to make sure that we keep that in mind. So one Achilles heel of this strategy is getting overconfident. And as a matter of fact, I'm going to make a separate video about some of the drawbacks to this strategy, because in the chat room I'm in, there's kind of like a debate between people regarding the risk reward ratio. Is it better to have higher risk reward or better risk reward ratios versus probability of profit? Which one is better? What's the differences? And there's a lot of people gravitating towards the more beneficial risk reward ratios versus the higher probability trades. So I want to talk about why I am leaning towards the probability side of the house. So I'm gonna make a separate video about that, so please tune in and subscribe for that. But anyway, that's where we're at. Here's our trades right there if you want to see what they were. Just a nice little call towards the end of the day and a put a little bit earlier than that. And the market had an interesting, pretty choppy day today, but pretty tight range overall. I was kind of surprised to see the negative bias towards the market when we had relatively good news in the calendar here. So we got a pretty good ADP number and pretty good unemployment number. Actually surprised that the unemployment claims fell when we were expecting a rise in it. So I was kind of surprised to see the market be so negative about it. But we also did get some layoff news from Amazon and a couple of the tech companies, and people are already expecting a recession. So maybe they kind of see that as the chips starting to fall or whatever, but still kind of surprised. But anyway, that's what it was. So stay tuned for that next video, and we're out for today. Thanks.